Hello, I'm Ofer Druker, CEO of Tremor International. Thank you for taking the time to listen to our 2020 half-year results presentation. Today, I will be giving an overview of our performance and operational highlights in the first 6 months of the year, as well as an update on our trading in Q3. Overall, whilst trading was impacted in H1 as a result of COVID-19 restriction affecting the global advertising markets, we have seen a very strong performance in Q3. This is particularly the case across our key growth engines, which is very pleasing as it both reinforces our strategy and is indicative of a potentially very strong recovery for Tremor throughout the second half of 2020. Put simply, our business has been formed through the coming together of three very complementary and leading video companies, which each brings a particular strength to the group. These three businesses are Tremor Video, which focus on data and audiences, Rhythm One, which centered on media and CTV, and Unruly, which we acquired in January 2020 and brought with it strong branding credentials as well as our strategic relationship with News Corp and some of the leading global advertisings that are part of the U7 that will be presented. The combination of these three businesses has created a unique full-stack programmatic video solution. Our vision remained unchanged. We want to create one of the largest unified programmatic marketplaces specialized in video and CTV in the world. This is underpinned by three core pillars focused on video, media and connected TV, and data audience. With our exchange platform enable us to connect with our audiences seamlessly. We believe and are reassured by our recent trading performance that our proposition will prove resilient against the current uncertain market backdrop. We will take a closer look at each of these three core elements I mentioned here later in the presentation. As I touched on, we have a very strong Q3. We are seeing a recovery in our core markets. Overall, we have made significant progress in our transformation to focus on video. Branding revenues in Q3 are anticipated to be between $90 to $95 million versus $67 million in the same period last year, a significant uplift. Furthermore, if we look at our core growth engines in Q3 2020, Connected TV revenues are expected to double versus the same period last year to between 20 to 25 million. This is close to the 28 million that was generated across the whole of H1 2020. Self-serve revenues are also expected to increase by 515% to $8 million, and revenue generated by private marketplaces are anticipated to be between $16 to $17 million, which is more than the 14.5 million generated throughout H1 2020. This performance is indicative to the significant client interest and momentum that we have achieved in the quarter. Now, if we take a step back and look at our highlights for the first half of the year, we achieved revenues of $136.5 million, the decrease in which was a result of the impact of COVID-19 on our end markets, as well as the continued and anticipated reduction in contribution from our performance division. At adjusted EBITDA level, we recorded a positive of $1.8 million, which is ahead of the guidance that we outlined in our June trading update. Gross profit was $46.2 million in a period with gross margin of 33.7%. Operationally, a core focus for the first 6 months of the year was the integration of Unruly, which we completed ahead of schedule and the benefits of which and synergies from we're really beginning to see. In addition, management undertook a number of preemptive measures in H1 to mitigate the reduction in trading volumes experienced as a result of COVID-19. These initiatives are expected to deliver cost saving of around $23 million compared to our initial yearly budget. If we turn to look at the broader market trends, there is a continued shift in ad spending from traditional TV to digital video, with an anticipated 82% growth expected in the US digital video ad spend between 2019 to 2022. In addition, the connected TV market, which is a very important element of our offering, is booming. All of the key metrics demonstrate the growth of this segment, with an overall increase in CTV viewers in the US and a continued shift in households opting for CTV as opposed to pay TV. Advertisers allocate their budgets where individuals are consuming the most content, so are moving their focus to CTV, as it's evident in the increase in OTT ad spend in the US with a CAGR of 41%. Interestingly, the global lockdown restriction associated with the COVID-19 pandemic have actually accelerated the adoption of connected TV, which is beneficial to Tremor as an increasing proportion of our revenues are generated by CTV at currently around 25%. For example, the use of AVOD or ad-supported streaming service is increasing versus non-ad-supported streaming services with an increase of 7% between January and June 2020. Now, if we turn to look at our technology stack in a bit more detail. Our end-to-end offering is one of the key differentiators of our business, enabling us to optimize solutions for advertisers and publishers. In turn, our product suite provides us with a number of unique benefits which include high-quality media, ensuring delivery and fulfillment of campaign books, providing a strong position versus media partners, offering sizable quality reach, and the ability to maximize margins and profitability. As a business, we have a strong international presence, which is important in order to work with global advertisers. We also have a significant workforce of around 600 employees in total, with approximately 100 in R&D, as product development remains key in our bid to stay ahead of the curve, and roughly 120 people in sales and marketing as we continually look to augment our routes to market globally. If we turn to the next slide, this gives you an idea of the companies and advertisers we work with, many of which you will recognize as the world's leading brands and truly top tier, such as Amazon, GSK, Sony, Netflix, and Samsung. In addition, we have a number of CTV partners which are key to underpinning our offering in this segment, with international partners including LG, CBS, Rakuten, Viacom, and many others. Further to the high-quality companies that we work with, we also have access to some of the most trusted sites and media outlets on the planet, with reach in North America of around 250 million users, 300 million in Europe, and close to 400 million in Asia Pacific. We have broadly covered off two of the core pillars that are core to everything we do, video and CTV. Let's now have a closer look at data. We are able to reach audiences by adding an extra layer of data to our DSP and SSP, which makes us more efficient and unique to our advertisers and media partners, and therefore more attractive. This allows us to charge also higher CPMs. In 2019, we renewed our partnership with Alfonso, the leading TV retargeting enabler in the US and Canada, which has been instrumental in placing Tremor at the forefront of the ever-evolving TV retargeting space. It has enabled us to provide our customers with unique targeted campaign, which can be delivered across CTV, mobile, laptop, and tablet to maximize impact. Now, if we take a look at our ongoing strategy, this remains unchanged, despite the ongoing macroeconomics uncertainty, as our approach has been proving successful in 2020, as it's particularly evident in our Q3 trading to date. Just to review again our core growth engines, these are to leverage our CTV expertise to grow market share, to further burden our relationship with agencies and advertisers for our self-service platform, to introduce our private marketplaces to additional Tier 1 agencies, giving them access to premium media and innovative solutions, to further expand to international markets behind the US, and to evaluate select M&A opportunities has always been core to our ongoing strategy. As we have already touched upon, our solution across CTV, self-serve, and private marketplaces are performing very strongly. On CTV, we saw a growth from H1 2019 from $6 million to $28 million in the first half of 2020. On self-serve, we saw a growth from $3.4 million in H1 2019 to more than $8 million in H1 2020. And the PMP, we saw a growth from $1.1 million in H1 2019 to more than $14 million in H1 2020. As part of our acquisition of Unruly, we now own the U7 console, which is incorporates 24 of the world's biggest brands and advertising agencies, which are partnered with us to discuss further an innovation of the industry. These companies represent over $16 billion in advertising globally, a strong base for growth. Clearly at the moment, we are operating in an unprecedented environment due to the influence of COVID-19 pandemic. However, we have some positive trends emerging, and Tremor is well positioned to benefit from this. This includes an higher importance being placed on online advertising, giving the acceleration of digitization and business models shifting to online. Enhanced growth in CTV, which is already a major growth engine for us, and we already have a relationship with leading CTV publishers in place. Cost is of more relevance to agencies, and our self-serve platform is offered at a prudent cost and supported by creative media buying on the exchange. Increase overall significance of self-serve tools, and our self-serve DSP is already experiencing a strong growth quarter over quarter. In summary, we have seen a very strong performance in Q3 2020, which has really reinforced our strategy and give us a good indication for a strong recovery in the second half for Tremor. However, whilst trading was affected by COVID-19 restriction in the first half, we implemented a number of proactive cost-cutting measures to mitigate the overall impact. Looking forward, we are confident in the outlook for the business, with our key components for growth, including CTV, performing strongly, and the company remains profitable with a strong cash position. We, of course, continue to monitor the wider macroeconomics environment closely. Trading thus far in H2 2020 has demonstrated a recovery in the advertising market. Overall, the board believes Tremor medium to long-term prospects remain very positive.